guys on central banks. Hi, this is Ahura and I'm here with you to see the most important events in the week ahead. We are waiting for a very volatile week focusing on central banks in the United States, United Kingdom and Australia. While market participants are waiting for policymakers' decisions, Ukraine crisis and food security are weighing more and more on the world economy. Ukraine reports that Russia is preparing to increase military action in the east. On top of that, this week also includes NFP and employment data from Canada, Europe and New Zealand to watch. Number 1. ISM manufacturing and service PMI. Both service and manufacturing sectors still suffering from qualified labor and supply constraints. In March, manufacturing index slowed to 57.1, but service index increased to 58.3. For April, both indexes are expected to ease and stress the effect of ongoing geopolitical tensions and inflation fears. Number 2. Monetary policy meeting and interest rate decision in Australia. Australian inflation and Chinese lockdowns put more and more pressure on Australia's economy every day. Australian CPI lifted 2.1% in the first quarter of the year, while the annual rate jumped to 5.1%. Aussie dollar and New Zealand kiwi experienced one of their worst performances with almost 6 and 7% losses in April. Like other central banks, inflation and economic growth are the primary concerns, and any decision to control one makes the other worse. We expect a little bit hawkish decision or at least tone in the announcement, which is supposed to help the Aussie dollar regain some of its April losses. Number 3. Fed May meeting. FOMC's 2-day meeting will start on Tuesday, May 3. On Wednesday evening, we will have the Fed monetary policy announcement and 𝗃𝗶𝘵𝗶𝗃's press conference. Inflation increases with ongoing geopolitical tensions, higher energy and food prices, and supply chain disruptions. Aggressive decisions will be harmful for the stock markets and vice versa. On the other hand, the labor market has significantly improved to increase the risk of aggressive action by FOMC than projections. According to the CME Group, the chance of 50 basis point rate hike is more than 97%. Number 4. Bank of England policy meeting. The Bank of England, the first G7 member to increase their rates, is expected to increase interest rates by another 25 basis points this Thursday. Therefore, the BOE interest rates will be 1% by the end of this week. At the same time, we will have the BOE economic and inflation outlook. We expect the BOE's economic projections to include an upward revisions to its CPI inflation forecast and downward revision to its GDP growth forecast. Expected decisions and outlook are supposed to put more pressure on British FTSE. And finally, number 5, US non-farm payroll. 341,000 new created jobs in March was much less than February and estimates. For April, it's also expected to fall more, down to 380,000. While in the first quarter, we had 562,000 new jobs created per month on average, these numbers can highlight the effect of a slower economic growth and higher inflation. Also, higher expected wages can be another reason for fewer hiring. However, it still can be a good number. The labor force participant rate rose to fresh cycle high of 62.4% in March and is expected to stay at the same level for April as well. Since the NFP numbers will be out just 2 days after Fed meeting, it should not significantly affect the market. Thanks for being with us and watching this video, and hope this week is going to be an amazing week for you.